I applied my day trading strategy to swing trading and made just one change that allowed me to make 15k through this sell-off on gold. First, I need to give you a brief overview of what the strategy looks like on a normal intraday trade. So I've brought it just before US session on the 25th of the 4th, just to show you an example of a trade. So I only trade gold from 1 p.m. till 10 p.m., which is US session, never before or after that. So this is just before 1 p.m. on the 25th. So I'd gone on the 15-minute and I found myself a US session bank zone from the previous US session. You can see the previous US session load out down around that point. So I found myself that zone where we're just starting in this US session, just in this next 5 minutes. So we're now in there. My plan is, if I can see a tap in, my higher time frame bias is bullish. If I was to show you the 4 hour, we're breaking highs on the 4 hour in these areas. So this is a very brief overview, but we are bullish going into this session, and we have a zone there. That is just where price is opening. So the first 5-minute candle of the US session, it dips down, then it comes back up, closes bullish as a rejection. It's not a super strong rejection, but it is a strong rejection of the zone. So from that point, it's valid for me to buy from there with my stop just in below the zone. Then my target, now listen to this because this is where it gets important. So my target, what other zones do I have? Well, I have US bank zone from the previous day, and then we have another one up here from all these US sessions up and around here, which were messing around this price. So this is at what point I would put my target on. So I'd either be targeting that or I'd be targeting all the way up there. In this case, I'd target up there because that is not very far. I can definitely expect a big move on gold in US session all the way to the upside up there. Now, let me show you exactly what happens. So price pushes up, pushes up, pushes up further. It drops down a bit, ranges around, and then eventually it ends up pushing and taking out the TP. So almost 6 hours after I entered, this trade took TP. I was out before the day, before the trading day, before US session had even closed. That is a standard intraday US session trade, which slightly differs from the next one. Now, before I show you the actual trade of this video, I'm going to show you this next step so it's vital you understand this. So this is just before 1:30, which is 30 minutes into US session. And this was a Thursday, which means there was unemployment claims, which means we can still trade it. So the previous day gave us this US session bank zone in here. If you want more on bank zones, visit the link in the description. However, 1:30 on a Thursday means unemployment claims. So from this point, if we're seeing rejections, then we can sell to the downside. I've got a full video coming that in the next few weeks, so do stick around for that, specifically for unemployment claims. However, this one, looking for the rejection in there, then the drop to the downside from half one. So the first 5-minute candle does this. Again, the whole strategy I'm talking about here, it's not too important. What you just need to know is what I'm talking about in targets. So again, the bias was very obviously bearish. We were only looking for sells. And once we've seen the unemployment tap into that and then drop us to the downside, you could have entered from just below there, from the break of them candles in there after we'd rejected the zone with your stop just above. Now, in this case, targeting, there's no targets to go off. There's no recent price action to be targeting off. So in this case, what I would do, so the second example, what I'd do is I just hold until the end of the session at 10 p.m. So the session closes at 10 p.m. and I just hold it until that point to see what is going to happen once the session closes. So the session closes in and around this point here, and that is the point that I would close out because there's no target zones, there's nowhere for me to target. I would just close out once the session had closed. I'd enter and then I just would leave it until the session had closed, and then that is when I would close out the trade. And again, I would be out before the day is done, before the US is done. It's a standard intraday trade. So they're kind of the two ways that I would do it. However, what did I do on this third one that allowed me to make 15k? Now, the actual trade of this video, this is just before 3 p.m. on the 15th of the 5th. And this is just before I enter my trade. First of all, I need to give you some very important backstory to this. Now, you may remember a few weeks ago, I uploaded a video from me making 25k from making a sell in that point there. So why was I constantly looking for this bearish bias? Well, what we had was this massive weekly zone up in here. This whole weekly zone was a very, very strong one. The dailies were consistently rejecting this point right here and dropping us to the downside. And the day before I took that trade, we'd pushed up and then we'd come all the way back down looking to break lows again. And the previous weekly had been very, very bearish. The previous multiple weeklies had been very bearish at this point. And this is the weekly that we caught the sell-off in. So going back over to the 1 hour now, what we had this very, very bearish higher time frame bias. And now we can look at what zones do we potentially have in this US session to sell from. It was very, very obvious. We had a bank zone from the previous US session there, the high, we take that across. Also US session there, US session in there, did a break and retest, and then US session in here as well. So this is a very strong US session bank zone. And what we've done is we've pulled back into that. If I show you on the 4 hour, what we've done, big drop off to the downside like this. So we started up there, big drop off. Now this is a pullback. Now we're in this zone. We're looking for that next bearish leg. So that is what a trend is. Drop, pullback, leg. We're just looking for that next leg. That is where I was getting this swing from. By 3 p.m, we had actually pushed into this zone. And what we had done is we'd started to show rejection. So you can see it's a very, very strong zone. This US had pulled into it. Now I'm looking for rejections at this point. And the next 5 minute. So these two 5-minute candles are very strong rejection. So as soon as I saw this, I thought, okay, this is the start of a very big downwards move. This is going to be the very top. So I sold from around 2020. You'll see it on the actual profit thing, but I entered at 2020. My stop just above the zone, and then I was targeting just the next US session bank zone down, which for on the 15-minute was just from the previous day in here. So if I draw that on, it was from right there. So I was just targeting down into that zone down there at exactly 2004. So that was a very nice entry at 1 to 5.3 risk reward. And I was looking for this to drop to the downside. But what happened? So price dropped off very nicely. I thought it was going to be a very nice trade. However, it pulled back, dropped off again, did a lot of ranging. Now I'm going to skip it to the end of the day. This was 10 p.m, the end of the trading day, where I would usually always close. I always close at this point. It's part of the strategy. So here is where I tweaked it a little bit. I said, okay, I've got my higher time frame bias. Even starting on the weekly, we were showing some massive rejections at this point. The daily as well was inflow, and the 4 hour, remember, I was looking for that pullback, then that big bearish drop off to the downside, that next bearish leg. So I said from this point, for the first time maybe ever, I said, I'm not going to close it out now. I'm just going to hold it through to this zone down here. And this is exactly what happened. This was the point that I woke up on the morning after on the 16th at 4 a.m. And this is when I first checked it. And I thought, okay, this doesn't look too nice anymore. We are ranging. It is Asian session. So this is the point where I went break even. So I could no longer lose anything on this trade. And then here's what happened. It ranged around a bit. And then 6 a.m. came and it completely started sinking. This is the point I thought, okay, this looks very good now. Now we could be good to drop off to the downside. Now, obviously, this isn't a massive swing trade over multiple days. It's because I held it over a day for probably the first time ever that I'm calling it a swing trade, because it's no longer an intraday trade if you've held it throughout the day. So it's not technically a massive swing trade, but it is through a day, and that is how it came in. Overall, it dropped way, way further. So you could have swing traded and caught that. However, I personally, that for me is a swing trade. That's enough to be a swing trade. Holding it overnight as an intraday trader, that's more than enough.